Rising U.S. inflation forecasts see gold price rally from great entry point as Germany hits deflation. Gold prices gained on Tuesday as U.S. inflation forecasts rose but interest rates didn't, while latest data from Germany said consumer prices in the world's fourth largest national economy fell in annual deflation last month. Frankfurt DAX index of Germany's 30 largest shares fell 0.3% for the day, unchanged from early June after rallying over 40% from March's COVID crash, after the Federal Statistical Office said consumer prices fell 0.4% last month from September a year ago on its Euro-harmonized methodology, dragged down to the sharpest deflation since start 2015 by falling energy costs and a cut to MwSt sales tax aimed at boosting household spending. U.S. bond prices, in contrast, saw inflation forecasts rise as the Case-Shiller index of major city home prices accelerated to the fastest growth since end 2018 at 3.9% per year, and provisional data from the Commerce Department said the United States trade deficit in goods set a new monthly record of $83 billion in August. Expectations for the next 10 years' loss of purchasing power in the U.S. dollar rose back towards 10%. The deepest such forecast in 4 decades when first reached as gold prices set fresh all-time highs above $2,000 per ounce at the start of August. Trading up to $1,885 per ounce on Tuesday, gold priced in the US dollar meantime rallied 1.8% from yesterday's retest of Thursday's 8-week lows. Last Thursday also saw real U.S. interest rates, as offered to new buyers of 10-year Treasury bonds, after accounting for market-based inflation forecasts, hit 8-week highs. Dollar gold prices have now rallied $35 per ounce since then, while 10-year real yields have retreated back to -0.97%, the most negative since Monday last week and 6 basis points below last Thursday's peak. Gold prices were well supported in early Asian trade today, says a note from Swiss refining and finance group MKS PAMP, buoyant above $1,880. This comes after the yellow metal once again flirted with a break below the $1,850 support level. The note goes on, but found strong interest around that figure. With gold pivoting above $1,865 and accelerating gains into last night's COMEX close, the metal now targets a move through the resistance band at $1,895–1,905. Gold has been correcting and losing some froth, but not crumbling, reckons brokerage StoneX's Rona O'Connell. Gold's recent weakness represents a great entry point for investors, says Kelvin Tay, Swiss Bank UBS's chief investment officer for Asia, speaking to CNBC. Longer term, negative real interest rates on bonds and cash make the opportunity cost of holding gold quite low, he went on. Uncertainty over the U.S. election and the COVID-19 pandemic also makes gold is a very, very good hedge. Tuesday's drop in real U.S. interest rates came as 10-year inflation forecasts extended yesterday's rally from Friday's 8-week low of 1.58% per annum, rising to 1.62%. Interest rates on 10-year U.S. Treasury debt went in the other direction, slipping this morning to their lowest since early September at 0.65% per annum. Germany's benchmark 10-year bond yield also fell, slipping back to start August levels below -0.53% per annum. Gold priced in the euro meantime held above €1,611 per ounce, almost 8% below last month's new all-time high.